Good day, ladies and gentlemen, and a warm African welcome to the Africa Finance Corporation's 5th Country and Stakeholder Symposium. My name is Fifi Peters, and it is absolutely delightful to join you again this year after what I believe was a really successful meeting in 2024. Now, just as in previous years, the session is available for you to listen and to participate in the language of your choice, from English, French, Portuguese, and Arabic. So do feel free to make the switch should you need. Now, those of you who were with us last year, remember that we met in a year with the most elections worldwide on record. Political uncertainty was weighing on some major investment decisions as investors were still trying to recover from the disruption caused by the COVID-19 pandemic. However, instead of taking flight, African capital, that is money managed by pension funds and insurance companies and other institutional investors, were encouraged to stay here on the continent, help water the ground here to build a more sustainable future. This year, ladies and gentlemen, we are meeting again against a political uncertainty of a different kind. The world currently embarking on possibly its biggest trade war since the 1930s in a major transformation to the architecture of multilateralism and globalization as we have known. And perhaps the need for Africa to look inward, to enhance its resilience and to drive its development agenda has never been greater. So this underscores essentially the theme of this year's AFC Country and Stakeholder Symposium of making Africa's institutional savings work better for the continent. And as always, we have a fantastic lineup of speakers for you who will provide a pragmatic approach of how African capital can work better for Africa. You will, as in previous years, see a scorecard of the AFC's latest investments, and then we will hear from an expert panel who will weigh in on the topic that brings us here. We do not want to talk to you. Essentially, we're hoping that we can talk with you. So do share any comments or any questions that you may have, either on the online platform that you're on or even on social media using the handles below. But to get straight into today's proceedings, I would like to welcome our first speaker, essentially our host for today, Mr. Samaila Zubairu, the CEO and President of the African Finance Corporation, for his opening remarks. Samaila, good to catch up with you again. I last saw you here in South Africa, of course, in Cape Town at the launch of the B20 meetings, happening alongside the lead up to the heads of state G20 meetings in November. Certainly looking forward to what you have to say, sir. Over to you.
Good afternoon, Fifi. Glad to have you with us again today. Honorable ministers, distinguished guests, esteemed colleagues and partners, good afternoon. It is both an honor and a responsibility to welcome you to AFC's 2025 Country and Stakeholder Symposium. This is no ordinary gathering, and it is not a business as usual moment. We are standing at a historic inflection point, a moment of rupture, but also of rare opportunity. Our theme this year, making Africa's institutional savings work better for the continent, is not a slogan, it's an urgent call to action. A moment of reflection for us to ask ourselves, how will Africa prosper in a world that's fundamentally changing? The world order, the global order is being rewritten. The assumptions of the past 3 decades, open trade, free movement of capital, global supply chains are fast unraveling. What we're witnessing today, rising protectionism, tariff wars, reshoring of industry, marks the end of the globalization era, just as definitively as the fall of the Berlin Wall marked its beginning. And just as the rise of the internet powered global integration, this wave of fragmentation demands a different response, one rooted in regional resilience, internal strength, and economic sovereignty. Africa must now ask itself, if the world is turning inward, how do we move forward? I speak to you today, not just as a financier, but as someone who has lived this journey of value creation. Years ago, I was part of building what has become Africa's largest industrial conglomerate. That journey, rooted in import substitution, domestic value chains, and faith and conviction in African markets, taught me a fundamental truth. Africa can and must build prosperity on our own terms. This is why I believe that this moment is not one to fear. It is one to seize with confidence and conviction. Because what we need is rising to the challenge. And we can do that if we align our strategies, our institutions, and crucially, our capital. We believe the way forward begins with three critical shifts. First, we must rewire our economies for intra-African trade, not external dependence. For example, we've heard about the slew of tariffs that's going to face Lesotho and its burgeoning garment industry. Now, if we are intentional, can make that an opportunity for African branded jeans as opposed to the current program that they have. So this is an opportunity for us to rise, to show that our creative industry is truly creative. We can make those jeans made to wear for all of us in Africa. For too long, Africa has been a supplier of raw materials and a consumer of finished goods. That model was always value destructive. Today, it is economically unsustainable. The African Continental Free Area gives us the framework, but once we go further, scaling domestic value chains in mineral beneficiation, construction industry, iron and steel, cement and agribusiness, and beyond, so that our markets work for us. Why should we import steel from Asia to build rail lines and rail tracks from Chingola in Zambia to Wakano in Angola, when we can source it from South Africa? Why should we allow our South African steel mills to go into trouble or fail when we know that shortly we will demand their output? Nigeria's infrastructure boom alone can anchor a continental steel revival. Let's use our infrastructure needs, our grain markets, and transform and translate all of these into bankable projects that can become engines of long-term sustainable revenues, jobs, and competitiveness for our people. Secondly, we must turn our demographic opportunity and edge into productive power. While the rest of the world is aging and shrinking, Africa is getting younger. Over 70% of the population is under 30 years old. By 2050, we'll be home to the world's largest cities. The greatest urbanization opportunity will unfold before our eyes in Africa. We must be intentional about this opportunity and how to harness this opportunity. This is more than a workforce. It is a growing consumer base, a driver of urban infrastructure, energy demand, and industrial scale. We must be intentional about producing what we consume, transforming our minerals here, powering an energy transition, and building industries for our youth. This is how value addition becomes more than a policy buzzword. It becomes a national wealth and prosperity strategy, creating quality jobs, expanding tax revenue and tax base, deepening domestic savings, and feeding a virtuous cycle of investment and prosperity. Thirdly, and most critically, we must fund this growth ourselves. Africa cannot indefinitely rely on aid, concessional finance, or chase elusive foreign direct investments. The future of this continent must be owned and funded by Africans, and we are not starting from zero. Africa's pension funds, sovereign wealth funds, and insurance pools already hold hundreds of billions of dollars in long-term capital. Capital that is domestic, patient, and long-term, and ideally suited for infrastructure, industrialization, and sustainable development. What we need now is to change our mindset. We need a mindset shift from passive capital to transformative capital. We have several models to look at. In South Africa, pension assets represent 57% of GDP, with nearly half of that eligible for investment in infrastructure and industry. In Nigeria, through platforms like InfraCredit, pension funds are being channeled into infrastructure and industrial assets via local currency guarantees. Internationally, we've seen how Australia invests over $165 billion of its pension savings in infrastructure. Canada's pension funds allocate nearly 10% of their assets into global infrastructure, roads, renewables, airports, delivering stable returns and national development. We can replicate this success here in Africa with the right policies, platforms, and instruments. This means investing in infrastructure, private equity, infrastructure bonds, blended finance, risk-sharing facilities, and local investment platforms with regional scale. But more than all of this, we require conviction, real conviction, belief in ourselves, taking ownership of our development, and intentionally funding it. So what do we want from today's dialogue? We want to work with you, pension funds, sovereign funds, asset managers, to co-create vehicles that can deploy institutional capital at scale for Africa's growth. We want to understand the constraints you face, regulatory, liquidity, governance, and solve for them together through innovation, policy, and de-risking mechanisms. We know that pension funds are supposed to focus on first, safety, liquidity, and profitability. We would work to you to ensure that the instruments and products that you need to power Africa's industrialization and infrastructure development suits your purpose. We want to unlock allocations into infrastructure, equity, infrastructure bonds, private equity, and even venture capital so that you can fund the innovation of our youth. Our cities and entrepreneurs are not left behind. This is not about ideology. It's about strategy and sovereignty. It's about ensuring that the very workers' contributions that we manage today allow them to retire with dignity tomorrow, off the dividends of African infrastructural and industrial output. In closing, the world may be slowing down, but Africa is still rising. We have the people, we have the resources, and yes, we have the capital. Now we must connect the dots with urgency, strategy, and shared purpose. Let this not be another symposium. Let it be a turning point where Africa's savings finally begin to finance Africa's future. Let us build the financial architecture that works for us. Let us take ownership of our development. Let us lead with vision and with conviction. The world will not wait, and neither should we. Thank you very much.
Thank you, as always, sir. An absolute inspiration to listen to your words and your pragmatism and also your support for the African continent. I don't know if it was intentional or not, but I believe that the framework that you just outlined was one that essentially can make Africa great again. In the other side of the Atlantic, I believe they call it MAGA, but it goes by a different meaning. And I will certainly be coming to you, sir. I've got an idea for a fantastic pair of jeans that I think could be a compelling investment case for the AFC, but certainly we can talk offline. Thank you, Mr. Zubairu. Next, we are going to hear from Angola's Minister of Finance, Vera dos Santos Daves de Sousa, who will deliver this year's Ministerial keynote. Let's listen in.
Distinguished guests, ladies and gentlemen, it's an honor and privilege to stand before you today at the 5th edition of the Africa Finance Corporation Country and Stakeholder Symposium. I would like to begin by thanking the IFC for this important gathering, where we dialogue on a topic of great urgency and potential: making Africa institutional savings work for the continent. As Minister of Finance of Angola, I'm deeply aware of the challenges and opportunities within Africa's financial ecosystem. Today, we must collectively reflect on how Africa's huge pool of institutional savings, spanning pension funds, sovereign wealth funds, insurance reserves, and other long-term capital sources can be better mobilized to drive economic transformation, industrialization, and sustainable development across the African continent. Africa's institutional savings have grown exponentially, despite the fact that they remain underutilized in financing Africa's development agenda. Those funds represent a powerful engine for economic growth. But many of our economies continue to rely on external financing sources, despite having capital readily available within our own institutions. However, despite this potential, we face several challenges in leveraging the resources for development. Those challenges include lacking suitable investment opportunities, insufficient bankable infrastructure projects to absorb capital, and lacking robust financial mechanisms to connect savers with investment opportunities. This is why platforms such as AFC play a crucial role. As a member and shareholder of IFC, Angola has seen firsthand the tremendous impact that collaboration and partnership can have in addressing Africa's financing needs. The IFC has provided critical support in developing infrastructure, energy, and industrial projects in Angola and across the continent, helping to bridge the financing gap in ways that would have been quite different through traditional financing mechanisms alone. IFC has deployed $811 million into Angola, focusing on strategic infrastructure and energy projects vital to our country's long-term development. For instance, the IFC acted as a co-mandated lead arranger for the Cabinda oil refinery project, and also as lender with a commitment of $150 million across long-term facilities and hedging. Additionally, AFC acted as lead arranger under a receivable purchase agreement facility and provided $120 million facility to Sonangol in 2022. A flagship example of this vision in action is the Lobito Corridor project, announced at G7 Summit in Japan in 2023. This project is a testament to the power of collaboration and innovative thinking in reshaping Africa's infrastructure landscape. The Lobito Corridor project is not just a transportation and logistics initiative, but a strategic facilitator for economic growth, trade, and regional integration. The project entails the refurbishment of the Lobito Luau railway line, which will connect RDC to Angola, as well as the construction of a new 800 kilometers greenfield rail line linking Angola to Zambia. This crucial infrastructure will significantly reduce mine to port transit time from 45 days to just 1 week, and unlocking exceptional opportunities for developing critical mineral reserves. We believe that the Lobito corridor will enhance Africa's position in the global value chain, potentially generating billions of dollars in trade value. Recognizing IFC proven track record in delivering impactful projects, we made the strategic decision in 2024 to make the Angola Sovereign Wealth Fund a shareholder in IFC, a testament to our confidence in IFC's ability to mobilize capital effectively for Africa's transformation. As we look to the future, the role of the IFC will continue to be key in unlocking Africa's financial potential. We envision a future where Africa's institution savings are fully aligned with the continent's development goals and where resources are channeled into the sectors and projects that will create the most significant positive impact. IFC's model of blending institutional capital with development projects can be replicated across Africa by creating more investment mechanisms, building institutional capacity, and encouraging multi-stakeholder partnerships. We can unlock the true potential of Africa's institutional savings. Angola is proud to be a member and shareholder of IFC, and we look forward to continue the collaboration with fellow member states and partners to ensure that institutional savings become a cornerstone of our continent's development. I wish you all a successful event. Thank you very much.
Very kind words there, Minister. Thank you to you too. Also, just to giving us insights into the impact that the AFC, of course, has had on some of the development areas and priorities over in Angola, most notably in infrastructure and in energy, but also just underscoring the importance of mobilizing further capital, particularly from institutional and domestic savings, to further the development agenda. I think the Minister's words quite notely recognizing the growth in savings on the continent, exponential in her words, but the utilization of those savings in the continent's economy, perhaps not the same scale. Notwithstanding some of the challenges that she did highlight, the purpose of today is to sift through those challenges, work through them pragmatically to see how we can further get more capital in pension funds, in insurance companies, as well as other savings tools into the real economy. But we're going to move to our second keynote address right now, this time from the institutional corner. Let's welcome Dr. Brooke Tai, Chief Executive Officer of Ethiopian Investment Holdings.
Your Excellencies, distinguished guests, ladies and gentlemen, it's a great honor and a privilege to speak at the 5th AFC Country Stakeholder Symposium. As a soon-to-be member of the AFC, Ethiopia is deeply committed to the shared vision of accelerating Africa's transformation through the innovative development and financing of infrastructure, industrial and natural resources assets on the continent. Today, I would like to focus on an essential topic that can shape the future of Ethiopia and the broader African continent, institutional savings, and how they can significantly impact our economics. With the recent reforms in Ethiopia and the growing investment opportunities, institutional savings are more crucial than ever in driving long-term growth, ensuring financial stability, and fostering a sustainable development model. Ethiopia is in the midst of a profound economic transformation. Our government has undertaken significant reforms across various sectors to open up the economy to domestic and foreign investment. We are creating an enabling environment for businesses, improving governance, and modernizing a regulatory framework. These reforms are designed to encourage investment in infrastructure, manufacturing, energy technology, and other sectors crucial to our economic growth. At the core of every successful economy lies a robust system of institutional saving. These savings are often generated through pension funds, insurance companies, sovereign wealth funds, and other financial institutions. In many cases, institutional investors are the primary channel through which capital is directed to large-scale, long-term projects, from infrastructure development to industrial expansion. Institutional savings can be the backbone of our economic future. They provide a consistent source of capital that can be used to fund essential development projects without relying solely on external borrowing or foreign aid. When channeled effectively, these savings can stimulate domestic industries, create jobs, and promote sustainable growth across key sectors. This is why EIH was created to harness the government's assets and create collective institutional saving for the people of Ethiopia. As Africa's largest sovereign wealth fund, EIH is committed to elevating Ethiopia by transforming its economy, championing partnership, and world-class portfolio management. We hope to drive economic transformation and harness the growth potential of a young and increasingly urban population to generate jobs and financial returns for the nation and its co-investors. Our vision is to create wealth to meet the nation's developmental objective and lay the foundation for prosperity by enhancing the quality of livelihood of its citizens. While institutional savings are crucial for Ethiopia's growth, their impact extends far beyond our borders. Africa as a whole faces a tremendous opportunity to harness the power of its own institutional saving. Across the continent, pension funds, insurance companies, and sovereign wealth funds represent billions of dollars that could be invested in African infrastructure, technology, and industrialization efforts. Now, ladies and gentlemen, imagine a continent where African savings are used to finance African growth, where local capital is deployed to build the infrastructure Africa desperately needs. By focusing on growing institutional savings within African nations, we can create a virtuous cycle that reduces the need for foreign debt and dependency on external resources. Africa's potential to generate its own saving is vast. By investing these funds locally, we can stimulate domestic industries, encourage innovation, and create jobs. Additionally, growing institutional saving can help Africa tackle some of its most pressing challenges, including poverty, unemployment, and inequality. As we continue implementing reforms and position Ethiopia as an attractive investment destination, we understand the importance of working with institutions like the AFC. The AFC's focus on infrastructure and investment in key sectors aligns with our vision for Ethiopia's future. Together, we can unlock financing for infrastructure projects, strengthen our industrial base, and promote sustainable growth. We also recognize the importance of deepening our partnership with institutional investors. By attracting investment from pension funds, insurance companies, and sovereign wealth funds, we can tap into the enormous potential that these funds represent and direct them towards projects that generate long-term value for the Ethiopian economy and for the African continent. In conclusion, growing institutional saving is not just a financial strategy. It's a crucial tool for shaping the future and building a more prosperous Africa. By strategically investing the savings in crucial sectors, we can create the conditions for sustainable, inclusive economic growth that benefits all Africans. Together, we can create a future where Africa's growth is powered by its capital, driven by its people, and sustained by its institution. With takeaways from today's event, let us work together to turn this vision into a reality. I wish you all a truly transformative afternoon, and I thank you.
And thanks to you too, Dr. Brooke Tai, the Chief Executive Officer of the Ethiopian Investment Holdings, challenging us just to, of course, imagine a home in which the beauty of the home is funded by our own resources. And I would argue that in this world whereby the aid pool is getting smaller as a result of recent events and the pulling back and the dialing back of a lot of aid donors to the continent, that this world is certainly not one that we just need to imagine here on the continent, but certainly one that we need to take concrete action towards realizing. Now, at this time, I'd like to welcome the Executive Board Member and Chief Investment Officer, Samay Shinuda, to take us through what African Finance Corporation's investment journey has looked like in the past year and, of course, where it's going. And I can't help but notice that you've got a story of progress to report. I see that Ethiopia is coming on board. This time last year when we were in conversation, you, of course, were reporting the first non-African member of the AFC being the Turkey Exim Bank. What do you have to report this year, sir?
A very warm welcome to everyone in our 5th Country and Stakeholder Symposium. What I would like to do, I'll share a few slides, but to our current shareholders, lenders, and to our future shareholders, to walk you through our journey of 2024 and let you know where we have invested, how we've invested, how successful we've been, and a few very interesting stories that really are impactful and transformational for Africa. If we can go to slide 3, please, that shows the investment performance for 2024. We've invested around close to $2 billion in 2024 in 8 different countries and in 6 different sectors. We've been extremely profitable and successful. We have delivered revenues of in excess of $500 million. And if you can see from the map, it's quite diversified. It's quite, both in terms of geography and in terms of sectors, and you see the countries that we've invested in. One important point as well is that it is important that after we have delivered our mandate and our mission, we start recycling the funds and exit or sell down or get repaid on our debt. So we've had also one exit or sell down in one of our platforms where we were able to recycle $75 million of the money that we have invested at a very attractive return. Next slide, please. So one other thing that I would like you to know is that we are not only an investor, we're not a solution provider, but we also are a catalyst, a real locomotive to change in Africa. Her Excellency, the Minister in Angola, has mentioned the Lobito Corridor. Samaila, our CEO, has mentioned it as well. We are the lead developer of one of the key transformational projects in Africa that will connect East Africa to West Africa. There are 2 railway lines that are existing currently from DRC to the port of Lobito, and another one on the east side that connects to Tanzania. The Lobito corridor that is led by AFC, supported by the US government, by the European Union, by the African Development Bank, but most importantly by the Angolan government, the Zambian government, and DRC, is an 830-kilometer project that will link the Copper Belt area in Zambia to the Lobito corridor on the west coast of Angola. This will reduce the transport of critical minerals that are needed across the world. It will reduce the trip from 45 days to 1 week, which is a huge saving in terms of time, in terms of efficiency, in terms of climate impact, etc. But for us, this is not just a railway line. There's so much that is going to be built around it, whether it is industrial zones, agriculture businesses, storage, and other tourism, for example, and other areas that will really bring this whole region to life and put it on the map. This is a project where, as I said, we have a lot of support from different nations, but AFC is the developer, the key developer of the project, and we will make sure that this is delivered on time and on budget. So I wanted to also give you a view on how we also develop projects from a concept all the way to investment into the project and attracting third-party capital into it. If we go to the next slide, please. So this is our portfolio construct. We have grown the portfolio from around $6 billion in December 2023 to $6.6 billion, so about 10% growth. And you can see the split by region. It's reasonably diversified. West Africa is still the largest region for us, and this is because of historical reasons and because our key shareholders are from West Africa, but there is a lot of diversification initiatives that we're going through. Our sectors as well are reasonably well balanced. Our largest is transport and logistics, but the rest are all between 10% and 20%. Our newest sector is mining and metals, so it is at 10%, but it's growing quite steadily. Next slide, please. If we take each sector, just to dig a bit deeper in terms of sectors, the power portfolio is around $1.3 billion. We have 24 projects in 12 countries. We are the largest renewable energy player alongside our partners, Infinity, Masdar, and EBRD, with 1.4 gigawatts of operating assets and in excess of 10 gigawatts of pipeline projects. In terms of financial instrument, about 2/3 is debt, and the rest is equity or equity-linked projects. And in terms of different fuel source, let's call it, we have 3 projects that are hydro projects, 6 thermal projects, and 16 wind and solar projects. And then we have 1 project in transmission, which is one of the key sectors that we would like to continue focusing on, or subsectors to focus on over the next few years. If we go to the next slide on energy resources, which covers oil and gas, we have a portfolio of about $1 billion, 11 projects that we're invested in now in 7 different countries. In this sector, we are mostly a debt player because we see that there is a lot of room for us to support local and regional players to unlock the sector, whether to replace potential large international oil companies exiting the region or starting new projects such as our Pecan project in Ghana. A balance between offshore projects and onshore projects, 4 offshore and 7 onshore projects. Next slide, please. On transport and logistics, we have a portfolio of about $2 billion, $1.8 billion to be exact, 18 projects in 10 countries. On this one, we are a majority shareholder with 57% of Arise IIP, which is a special economic zone platform that has 4 operating assets in West Africa and around 7 that are under development or construction. And we've really seen this company grow from, again, a concept, a single asset in Gabon, to now a very successful business with a value of in excess of $1 billion. We're large investors in ports and logistics as well. In ports, mainly 5 ports, petroleum logistics, 3 projects, aviation, and roads and trade. If we go to the next slide, please, mining and metals is, as I said, this is one of our relatively new sectors, but we've done extremely well over the last few years, where we now are at around $700 million of portfolio, 8 projects in 7 countries, a mix of debt, equity, and other instruments such as streams, with critical minerals, which, as you all know, about 40% of the world's critical minerals are in Africa. So we see ourselves as an important player to transform that into not only extracting the critical minerals, but also in terms of adding value, adding a few steps to the value chain and capture as much value as possible within the continent. So we have 4 critical minerals projects in our portfolio, 3 precious metals, and 1 project which is industrial product. If we go to heavy industries, telecoms, and technology, portfolio of $1 billion, 13 projects, 10 countries, mostly debt again, and it's a mix of refineries, gas processing, cement, sugar, telecommunications, and technology, which is a new sector for us. Last but not least, our next slide, please. Our sovereign lending, we've lent to 5 African sovereigns around $1 billion over the last few years, and you can see these countries here, and we're keen to do more. We're also committing to do even more with our new partner, our partners, our new shareholders, and our new member countries once they come on board. We are also committed to do even more with our existing members and our existing shareholders as they also grow their contribution and their investment into AFC. The next slide shows a bit how the market sees us as well. It's not only what we do and how we see internally, how we see ourselves, it's how does the market recognize AFC and the work we do. We're very proud to see that we obtained 3 awards in 2024. That's the top side of the slide. Power Deal of the Year, Oil and Gas Deal of the Year from IG Global Awards, and Project Finance Middle East and Africa Deal of the Year for the acquisition of of Likela. What is also even more important for us is that our investee companies are also, and our partners are also receiving awards. Rise IIP, which I've mentioned, has received the Responsible Business Award from Reuters, and at the recent mining in Daba, our investee company, Dynamic Mining, received the Responsible Resourcing Award. Thank you very much, and I look forward to meeting you again next year.
A fantastic presentation. Thank you to you too. Great insights, of course, just showing us the investment lens of the AFC, a balance sheet that is not only growing in impact, it would seem, but also in scale. So let's move swiftly along then as we do discuss scale and as we do discuss doing more right now at this year's symposium. It is our panel that will be delving into the topic of the role of institutional savings in Africa and leading economic growth here on the continent. Now, these are leading experts that will be bringing insights and also providing a solutions-driven discussion to crippling Africa's overall financial challenge into the domestic institutional savings, capital mobilization and economic development. Let's meet the panelists.
And the panelists are Kabelo Rekotso, Chief Investment Officer at the Public Investment Corporation; Ayan Adam, Senior Director and CEO at AFC Capital Partners; Armando Manuel, Chairman at Angola Sovereign Wealth Fund; Ayman Soliman, Managing Partner at Morpho Investments. And the moderator is Banji Fahentola, Executive Board Member and Head of Financial Services at the Africa Finance Corporation.
Thank you very much for that, and I believe we're all having a very great engagement today. My job today is really to moderate a panel, and this is a very, very important panel. To me, this is a topic that I think is so dear to my heart. We're talking about how to make Africa's institutional savings to work better for Africa. But specifically, my panel will be talking about how institutional savings on the continent can power Africa's economic growth. I think maybe just to set the context before I introduce my panelists, AFC's research shows that Africa faces an infrastructure financing gap of approximately $150 billion annually. Again, this is excluding, the cost of structural damage, which if we add, then we're looking at anything between 250 to 300 billion annually. Global partners have pledged support to the continent. We all know that. But with recent events and economic uncertainties, then we know that caution is probably the right word to use at this point. Despite all this, we do know that Africa's institutional savings, which by some estimates is over $500 billion, remains largely untapped. And so we have a lot of money sitting with pension funds, sovereign wealth funds, asset managers, insurance. The key question is, how do we unlock that capital in order to finance Africa's economic growth? So my panel today is a distinguished panel. I have people from sovereign wealth fund background, I have institutional asset managers, and what they'll be doing for us is to help us unpack this topic, want to explore how this institutional capital can play a more prominent role in driving Africa's developmental story. And I think this is extremely important for all of us as we think about how we can create almost like a homegrown story for Africa going forward. So I'll just spend a few minutes introducing my panelists. I have Armando Manuel. Armando is a distinguished economist and academia. He previously served as Angola's Minister of Finance, and today he's serving as the chairman of the board of directors of the Sovereign Wealth Fund of Angola, FSDEA, and he also serves as an advisor to the President of Angola on several strategic matters. I'm introducing them in alphabetical order. My next panelist is Ayan Adam. Ian has over 27 years of leadership experience and track record in emerging market investments, asset management, and climate financing. Prior to our current role, Ian was with the Green Climate Fund. She also has significant experience working with the IFC, and currently she's the CEO of AFC Capital Partners, where she's leading the implementation of the Infrastructure Climate Resilience Fund. My next speaker would be Ayman Soliman, again, a man with many years of experience, managing over 200 companies in diverse sectors, a solid track record of accomplishments in global investments. Now he oversees a company called Morpho Investments, but before then he was the CEO of the Sovereign Fund of Egypt, that's the TSFE, and before that he was also the CEO of Gemini Holdings, which is a multi-billion-dollar family office, and he held that role for over 10 years. Last but not the least, I have Kabelo Ricotso, who also has several decades of experience in financial services. He's a proven investment manager, deal maker, business builder, and a risk manager. And Kabelo was previously the chief investment officer at the PIC. And in 2023, he started his current role as an executive director at the PIC. The PIC is a shareholder of AFC, and Kabelo serves on the board of AFC as a non-executive director, and is also on the board risk and investment committee, as well as the board nominations and governance committee. So those are the people that will be helping us to unpack this topic of how we can mobilize and use Africa's pool of institutional savings in a better way to drive Africa's economic growth. So I'll be going around my panelists talking in different, I won't follow any particular order. I'll just call them as I like. So my panelists, please do pardon me if I pick on you at any point in time. I'll try my best to see how many questions we can take. And if I can take questions from the audience as well, I'll also try to take a couple of them. I'll start with Armando. Armando, you are the chairman of Angola Sovereign Wealth Fund, and we all know Angola, like many economies in Africa, is, based on commodities. We face all sorts of commodity cycles from time to time. And of course, that tends to drive how those economies operate from time to time. So at the FSDA, really, we've noticed that you are evolving from a traditional stabilization role, and you are moving into a more active role as a national development agent. And even importantly, you're beginning to even look outward, outside of Angola. Are there any lessons that you would like to draw the attention of our audience and other African countries that are listening on how a country can move from being resource-rich and using that resource pool in order to build investments for the future? Armando?
Thank you. Thank you very much. Actually, I have to emphasize that we were established 12 years ago. Our initial mandate, as you mentioned, was strongly associated with the fiscal stability. But as the time went on, we had to adjust ourselves with the changing realities. And today we embrace two distinct mandates, one that is maximizing returns, and the other, which is contribute to sustainable economic development of Angola. Today, the Angola Sovereign Wealth Fund, it's likely compared to a late generation fund. While initially we were endowed by resources coming from oil, today we are endowed by additional resources, which are now liquid assets. And this continues to drive our focus towards strong alternative investment asset classes policy, and play has anchor investment. I mean, specifically on your question, what other countries can learn? I believe it is important at early stage to clarify clearly the specific mandates, whether we are talking about a savings vehicle, a stabilization buffer, or development catalyst, and tailor the investment policy, the risk appetite, and the governance accordingly. This is what we have done as we went on into the journey. So we believe rich African countries need continually to explore the opportunities coming from extractives. I mean, a number of countries are heavily endowed with natural resources, but exploring a way to set up funds that once aligned with the national development plans can serve as engines for job creation, for infrastructure, and inclusive growth. We believe that with the stronger governance, with the independent oversight and transparent reporting, it's critical to attract credibility and move towards one approach associated with alternative investments. I would not forget perhaps to mention that Pan-African collaboration among sovereign wealth funds is important. I mean, we have heard alongside the sovereign wealth funds perhaps emphasize the role of pension funds and DFIs. These can enhance the scale, this can reduce risks, and can align investment with the continent's broader goals like the Africa Continental Free Trade Agreement. So basically, this is how we see other countries can learn from the experiences that we have been grappling.
Thank you. Thank you so much, Amanda. I mean, I picked up the word collaboration, very key as we think about how, all the various pools of capital can work together to realize the continent's goal. I think that this is a good place to bring Kabelo into the conversation. And Kabelo, I mean, you are obviously, working in one of Africa's largest institutional investors, and the PIC, no doubt, has played a critical role in shaping South Africa's economic landscape. So, we are well noted for that. In recent years, though, we've seen you extending your influence across the continent, including your decision to become a shareholder at AFC. I'm just curious, I mean, and I'm sure our audience would like to also understand, what the strategic rationale is behind such an investment decision, and how does this kind of broadly reflect a shift in PIC's vision from being just a domestic investor to a continental catalyst? Kabelo?
Thank you, and good afternoon, everyone. I think from our side, so PIC first invested as a shareholder in AFC in August 2022, and the check size we wrote was $100 million. The rationale behind it was for us to support infrastructure and industrial development across the continent. We had come to a realization that being based in Korea in South Africa, us to access the continent, we need to partner and collaborate with others. And in this case, AFC provided us to a platform, not only a platform to invest across power, transport, logistics, and also natural resources, but a platform that allows us to co-invest alongside AFC in future opportunities across the entire continent base. We do believe that our collaboration with the AFC implies what is a growing role for African institutional investors in financing the continent's infrastructure. We do think that this is not just a diversification thing, but it's a strategic imperative to be aligned with our own developmental needs, which is mandate. One, we believe that will promote shared prosperity amongst all of us. It will be to facilitate transformation and also infrastructure-led growth. As the PIC, we see ourselves as a catalyst. We include within the South African market, we've been a catalyst for left-owned fund managers, private equity players, but also public market players. We decided to take the same stance on the continent, where we have now supported also other private debt players, private equity players, but also in the infrastructure side, we have chosen AFC, one of our key strategic partners to ensure that we can boost infrastructure across the continent. Just as a high level, what was the key rationale for us investing? First one was obviously diversifying our asset base. We believe the continent offers higher and better growth prospects. So we do think from a long-term return point of view, investing in the continent is the right thing to do for the chance. But also from a sustainability point of view, we do believe that African capital should be invested on the continent and for its own. The other key one is that, I mean, we have seen with what's happening in the US, we need to support regional integration. So any entity for us that supports regional integration, we would like to put our capital behind it. The last one is developmental impact. We think that supporting infrastructure will eventually lead not just into job creation, but to drive Africa's long-term transformation. Thank you.
Okay, thank you. Thank you very much, Kabelo. I think I'm going to bring Ian into the discussion now. And the question I want to ask Ian is an interesting question in the sense that I know we've talked about this a number of times. My previous role, I was treasurer, and I went around the whole world essentially begging asset managers to give us back our money. You know, the money's African money that is saved in New York and other parts of the world, we're essentially asking them to give us back. And then they ask us, they say to us that there's a risk premium you have to pay to get your money back. So clearly there's the issue of risk, and then there's also huge demand. And so the reason why I'm bringing you in here, Ian, is, you know, you certainly know that there's a lot of capital on the continent, and you are trying to build a fund. I mean, that's what you're doing now with ICRF. And I believe ICRF is just one of many funds that you may potentially raise in future. So from your perspective, how do you think you can convert this pool of African capital, you know, with all the perceived risk and all the conversation about structural constraints? How do you see yourself as an asset manager providing the right vehicles to convert this capital into productive uses, like an IRF, for example?
Thank you so much, Benji. And I just want to welcome everyone to the AFC 5th Country Symposium. Thank you so much, Benji. I think, first of all, the asset management arm of the AFC is very much part of the global or the group AFC strategy. So from an asset allocation, there are investors that are comfortable being in a company that is private, that is doing incredible work, that's giving great dividends. But part of the 5-year strategy that was laid out by our chairman and the group CEO was to also offer vehicles for investors that are interested in a return or a fixed term investment, if I may say. So the Infrastructure Climate Resilient Fund really continues AFC mandate, but it also gives investors ability to get out in 15 years. Moreover, when we conceived this fund together with the whole senior management team, we really looked at and talked to many institutional investors across the continent and across Africa. And many of them have not invested in infrastructure, and it's a new asset class. So the other very distinctive feature about AFC's Infrastructure Climate Resilient Fund, it is for the first time we are recognizing the impact of climate on our infrastructure. And this is a reality. We've seen what happened in Mozambique. We've seen what happened in the port of Durban. You've seen what happened in the ravages of flooding in parts of Nigeria. So we are currently living in a very new geopolitical landscape, but also a new climate impact landscape. Africa has not polluted the world, yet we're suffering the consequences of climate change. So we are the only fund in the market that has integrated physical climate resilience into the way we can look and plan infrastructure. The opportunity here is that 80% of our transport and power infrastructure is yet to be built. So what ICRF offers investors is a new look as to how we can plan, design, and construct infrastructure. Moreover, there is, because of this mandate, we have the largest first loss capital from the Green Climate Fund. So 1/3 of the capital is subordinated to the senior investors. So we think we have come up to Africa. AFC has come up with a differentiated product where the target when we went in was to mobilize the trillion that is in the Africa continent. I think I want to echo the messages of the ministers, the head of the Sovereign Wealth Fund of Ethiopia, and our chairman, Samaila. We are living in a different landscape. This is a product that protects your downside with 1/3 first loss. And also, the first loss investor has a lower return. So this really directly addresses the risk return perception. Even though as AFC, in our 18 years, we've proven that we can invest this capital responsibly, profitably, and we do return to investor. That's what ICRF is, a change in the mindset. It is a co-investment vehicle with our investment team led by Sameh. But what we're doing is we're changing the landscape as to how infrastructure is built. And this is going to be the norm, because infrastructure that is not resilient to the impacts of climate will break down, will not be able to sustain debt. As you know, if you have a climate event in a port, the whole operation shuts down. So I think when we started, it was a new concept, but I think today there is a realization. We have already mobilized from 3 high-quality African private pensions, but we have a target of going to 10. So Kabelo, if I come knock at your door, please open it a little bit. But the reality is this is part of AFC's strategy to offer different vehicles to its investor pool so that we can mobilize the maximum for this region that is still lacking. 80% of our transport and power infrastructure is yet to be built. We cannot industrialize without power and logistics. We cannot create supply chain without these 2 critical bloodline to supporting Africa's growth. I'm going to stop there, Banji, but thank you.
Yes, I mean, I see the passion. So I know I am so passionate about, in fact, actually, I was going to come to climate, but you've kind of taken it, even before I asked the question, you're already talking about climate. And interestingly, Ian has answered a question. I was looking through the questions from the audience, and someone had raised the question about raising the bar on quality of infrastructure so that they are more resilient. And I think Ian has proactively even answered the question before listening to the question. So Ian, thank you so much for doing that. I'm going to bring Ayman in at this point. And Ayman, you are such an interesting man. You lead an institution that is investing to drive economic growth and development across the continent, which is quite exciting. I found that exciting. Before this, you were leading the Sovereign Fund for Egypt. And so I guess my question for you really is, how do you see, sovereign-backed investors like your previous employer and institutional investors like yourself today? How do you see yourselves shaping the economic transformation that would occur across Africa? Because I hear you're interested in, building regional champions, innovation, and all those things. So I don't know, what are your thoughts on that, Ayman?
Thank you. And thank you for having me on this esteemed panel. I think the reading has been very consistent when it comes to my previous role, my previous hat, as a founder of the Sovereign Fund of Egypt, we were also building our strategy to try and understand what Africa has to offer, how can we mobilize our own capital, Africa to Africa sort of relationships. And this is where we were overwhelmed by the gap that is there. And the gap brings in what Ayan kindly referred to as the asset managers. So these are the ones that scout the good opportunities. They are the good litmus test to institutional investors. They are the handholders of capital to generate risk-adjusted returns and understand the formula of how to drive risk-adjusted returns and how to price their required return on investments. This is a journey, and it's an educational journey, and exactly as Armando said, yeah, our capital flies to capital cities, capital hubs of the world between London and New York, and you have to go there, shop back your own capital and your own savings that have been expatriated because the managers are sitting there. And this is the reality of the map. Who are the managers? And the rise of institutional sovereign funds across Africa was a very natural transition that will create an institutional shopping capability and institutional investment capability within those sovereigns. And the alignment of sovereigns to economic development goals, the alignment of sovereigns towards their own national and regional concentration, diversification, and creation of championships remains a very solid thesis. You will hear that same story 10 years ago, but probably now, today, sitting with those esteemed panelists across from the table, you see that the talent does exist. You see that the capability is there. You see that the conviction is there. And now you need to create the bridges between those institutional savers to the managers that will deliver the thesis and then return and create a full return capital cycle back to saving institutions and investors alike. And once that trusted cycle has been completed, then you can have more of that migration of capital between Africa and Africa. And this is the thesis that we started the Sovereign Fund with when I used to wear the hat. And when I exited, started my own setup, similarly focusing on the same thesis, very consistently doing that, trying to crowd in public-private partnerships. And then I think this is the next theme to the rest of your question. The public-private partnerships are the best alignment instruments where you can utilize successful private sector talent and management and track record to deliver private sector level returns, efficiency to SOEs. And I think this is a theme that will manifest itself extremely well and will create very good opportunities for asset managers like ourselves and the collective to really deploy their investments into those opportunities. I will end my note with probably stating the obvious, but we also need to remind ourselves of that obvious. With the landscape globally changing quite aggressively, this presents a golden opportunity for Africa. We are a real economy continent, and the real economy continent is where you turn to diversify supply chains, and I think Europe is poised to look towards Africa as their long-term growth partner. Similarly, as India and China are having their own competitive economic growth aspirations vis-a-vis the US and vis-a-vis the national protectionist movements that are emerging globally, then I think Africa can present a solid resource base because most of the African resources are being shipped towards Asia, where you have the largest industrial complexes, the factories of the world. And some of those will need to relocate. The beneficiation, as Her Excellency the Minister mentioned in her speech, the beneficiation, the value creation, the localization of value chains is the next frontier in Africa, and I think we are very much poised towards that. And I will stop there. Thank you.
I mean, absolutely, Ayman. It looks like you're reading from AFC strategy book, beneficiation and adding value on the continent. That's really what we are pushing as AFC. But thank you for those comments. I would come back to Armando for a second. Armando, I mean, you also, and I think the Honorable Minister of Finance also mentioned this earlier on during our keynote. You invested in AFC, so you're one of AFC's shareholders. And my guess and my suspicion, and you can correct me if I'm wrong, is that this aligns with your broader, investment strategy where you're looking outwards, also trying to diversify your portfolio. So as you look outward and as you move across Africa, what are those barriers that you feel from where you sit need to be addressed for, your capital to be unlocked, in a scalable manner and deployed across the continent? What are those barriers that worry you on the continent? Armando.
Thank you. Thank you very much. You mentioned that we have invested in AFC. Yes, indeed. Actually, that is part of our strategy. We have aligned our strategy with Angola National Development Plan. And this goes as well in line with the African agenda. So our understanding is that we need to diversify our portfolio coming from traditional savings fund. We have had significant exposure in securities, investing in bonds and stocks in the US, Europe, so on. What we did was to fine-tune the investment policy, allowing alternative investments to go up to 40%. All proceeds that are coming, all returns from the liquid portfolio, we reinvest it in Africa. As we speak today, we have investments across the continent in hospitality, in mining, in telecom, in agri-space. We are currently tapping pharmaceuticals, and we continue to go on exploring opportunities across the continent. I strongly believe that sovereign wealth funds need to move from a passive capital preservation vehicle to a catalyst of instrumental transformation. And in order to do so, we need to explore new mechanisms. We need to leverage blend finance models where public and sovereign capital, the risk early stages investment, and helps to attract institutional investors, DFIs, and private equity into a later stage. So we place ourselves as a de-risk mechanism because we know the market. We have capital to co-invest as equity, and we have the convening power. So this is what investors are looking to. So we understand this is a strategy to move on. So looking ahead, the Angola Sovereign Wealth Fund is building a Pan-African pipeline of strategic opportunities in interconnectivity. I mean, if you look, for instance, the continent, you have a pretty good power pool in West Africa, in East Africa. The Southern Africa power pool, I mean, it's pretty well advanced as well. But when you look to the problems that you have in South Africa with the power, when you look at the surpluses in Angola, the constraints in DRC, we understand this is one area that we need to tap on and leverage on existing surplus in Angola. We are currently looking to agro-industrial processing zones, digital infrastructure, green logistics, and domestically we are prioritizing projects that create jobs. Our understanding is that our capital must grow in value, but our capital must impact, must support the Africa agenda. In terms of connectivity, in terms of industrialization, building a more resilient economy, and this is all about jobs. This is where we focus strongly on alternative investments, and this kind of partnership that we have with institutions like yours, it's so fundamental. We have deployed capital to a number of financial institutions in the continent by taking equity to ensure good returns, but on the other side, to build the partnerships and move together in a number of investments. And we appreciate, I mean, the journey that you have been doing with us on Lobito Corridor, on Longonjo, a Rare Mines initiative. So this is the way to go on. We understand there's still a lot of opportunities. We need to be creative, explore those instruments in order to leverage as much as possible the existing resources. Thank you.
Thank you. Thank you very much, Armando, for all those words and obviously the compliments to the collaboration between yourself and AFC. So thank you for that. We probably obviously have to talk about risk. And I note that Kabelo is our risk expert on the panel. So I'm going to call on Kabelo to talk about risk. And I see some of those questions also coming from the audience. You know, people asking about political risk, currency risk, you know, volatility here and there. So as someone who is investing across the continent, Kabelo, you know, how do you view these things? Or maybe there's no risk, or you tell us, is there anything that keeps you awake?
Yes, I think I would advise those who are listening to invest in Africa Finance Corporation. You might sleep better at night. From our cases that we have, matrices that we look at. So where we are investing directly without an intermediary into the continent, or when we assess our partners or intermediaries into the continent, typically look at governance. That is one pillar that we focus on. And that governance pillar will look at what we believe is the government effectiveness, political stability, the regulatory quality or effectiveness, the rule of law, which is quite important for us. And obviously, just under that rule of law is the ability for you to repatriate your capital once you've invested, and also what we call voice and accountability. So it's the freedom of press, and also how does that particular jurisdiction control corruption. So that would be under the governance layer. The other metric that we look at is what we call the economic stuff. This is what everyone looks at, the growth within a particular market. We would look at the market size, the GDP growth, GDP per capita. We would look at portfolio flows into that particular market. And we will also try to understand the concentration level of a particular country. So obviously, we do have, our preference is obviously to be invested in countries where the revenue base is diversified, but we understand there are some cases where if there is a strong oil bias, we are still happy to invest, but we will obviously then look for other markets where there is likely something that will complement that. The other third layer is what we call the operating environment. So the labor market, we will want to understand the logistics, the trade, and the crime rate. And the other key one, which everyone looks at, is obviously the demographic dividend. So how we look at African countries, we have what we call a scatter plot, which looks at governance attractiveness, and on the x-axis, what we call the macro attractiveness. So typically, you would want to be invested in countries that show very strong governance attractiveness, but also very strong macro attractiveness. We want to essentially avoid manage countries where the governance attractiveness is very low, but also the macro attractiveness remains low. And we would rank these countries depending on where we believe we in those sectors, whether it's the government effectiveness, political stability, regulatory environment, the rule of law, the voice, the accountability, and also the control of corruption. So those at a high level, that's how we would look at particular countries. But you have to, at the core of investing, businesses can thrive in a very difficult environment. The fundamental analysis that you do in a particular business is quite key. So you find you may have a business that exists in a very difficult jurisdiction, but if their product is sold out and you potentially receive dollars, that business in our case could potentially be the company that we want to invest behind.
Thank
so
you.
we look at those and we try to balance. I'll answer.
Thank you. I mean, Cabello, I think those are words of wisdom. I suspect a lot of people will be sending their money your way to help them manage, given the way you've described, your investment strategy, which is awesome. I know we're running out of time, but I just want to quickly touch on two quick topics. Ian made a point earlier on about climate. Africa, they didn't pollute the world. I think that's what she said. But we also know that we do suffer disproportionately from the effects of climate change. So, Ian, I mean, in a minute, just tell me, is climate, how important is it? We see what's happening globally. People are saying, hey, forget climate, forget all that stuff. Is it still such an important topic when we consider investments, especially in Africa? In a minute?
I think, yes. So I think, let me answer this question in two ways. I think what we're seeing from the current rhetoric is that actually there is abandoning of the climate obligation of the developed world to cut emissions. So that is definitely happening. The second area is that a lot of the consequences of climate are really impacting continents like Africa. Of droughts, we're impacted, floods, because the world has already warmed. So what is going to be impacted is the flow of finance from the developed countries to support the climate needs of the developing countries. I think ICRF, as this particular product, is not impacted because we have secured, signed, and gotten the capital support that we needed. However, I think going forward, we still need to look at sustainable ways to manage our resources, and our resources are abundant, but they are not without risk of being depleted. So we need to look at, if we have 2/3 of the world arable land, we need to look at that we do not adapt, we don't adopt bad practices in the way because we could be the food basket of the world, both the food and the processing of those basket. So we have to look at it very differently. We have to look at integration of ways to harness that food basket and also processing it closer so that we can send those value. If we're not minding the climate, we will be not bright. There is still some money out there. So it's so important that Africa gets significant amount of funding through this mechanism, but we need to be smart, get that money and support the businesses that we need that will support our ability to adapt to climate. Second is the infrastructure. Physical infrastructure is going to have significant potential for damages, as we have seen in the last couple of years. In the last 4 years, I think we've witnessed at least 15 climate calamities that have impacted our continent. So, for example, we talked about Lupito Corridor, which we are co-investing with AFC. We do need to look at that entire corridor, figure out what are the areas that are susceptible to flooding. We need to look, and so that we can integrate the importance, because we want that corridor to be long lasting, not to have any issues, because it's such an important economic corridor. As the Minister of Finance in Angola has said, if it's going to cut down from 45 to 1 week, we don't want it to break. If there's a flooding in any part of the corridor, that will impact that timeline and competitiveness. So that topic still stays, but we need to be very cognizant that there is still some pools of money out there, and it's our imperative to support in getting that money, because this is money that has to, polluters still do need to pay. We do need to support in creating the resilience we need in all our ecosystem, agriculture, land, physical infrastructure, and others. Second is that we have abundant natural resources in solar, wind, geothermal, and the rest. And it's much easier to harness that if we're able to get that financing, in addition to our oil and gas reserves, because most of our countries are not, we're not net emitters. And then once you add the DRC, how do I call carbon sinks, we are helping the world cool down. So I'll end there, but I still think it's an important topic. Yes.
Yeah, I certainly agree with you, to be honest, that it's still an interesting and important topic. But I'm going to wrap up the panel by giving one of our panelists to speak on behalf of all the panelists about an important topic. I don't even know, maybe it's more important than climate these days, is the whole tariff war. So, Ayman, maybe I'm going to bring you on to just wrap this up on behalf of the panelists. Tariff. Is Africa going to survive? What's your crystal ball telling you?
Well, actually, tariffs do create a shift in supply chains globally, and the reshaping or the restructure of the ties of global trade routes will present an opportunity if Africa is ready to take that opportunity. The food basket, I named it. My first two investments as a banker in the industrial agro space and in the agricultural precision farming resource efficient avenues. These are the only no-brainers. If you look at Africa right now, it's the route of least resistance. But those markets are now not going to target the US, but probably go towards Europe. And Europe will be looking towards better, more cost-efficient and friendlier trade partnerships. And President Macron just yesterday came out and said, we will be looking at diversifying our supply chains, and we are looking at Africa to do that. And that's a clear message. It is an opportunity for us to act upon. While probably we were not slammed the highest tariffs compared to Asian export-oriented markets and larger trade partners to the US, but it got the rest of the world to rethink why we don't take anything for granted, don't take any long-term partnership for granted. And I think Africa has a solid opportunity to do so and capture that. So turn it into an opportunity with a very deal-making mindset, and our private sector partners and our buyers and our logistics partners in Europe are probably the ones poised to really deliver that confidence and vote of confidence back to their governments, and then we will start attracting private capital as much as institutional and developmental capital to make sure that sector becomes robust and sustainable. And it ticks all the right boxes, in my view.
Thank you. I mean, that's a very optimistic note to end the panel. I think what I'm hearing you say is, even though markets are red everywhere, Africa still remains green, at least as far as you are concerned. So, anyone looking or listening to us, Africa remains a great investment destination, despite all the challenges. What Ayman is saying is that his crystal ball tells him that Africa is still going to navigate this and come out successfully. So I just want to thank my panelists, Armando, Ayan, Cabello, and Ayman. It's been a great time talking to four of you. I know even if we had 2 hours, we'll still keep talking about this topic. So unfortunately, we have to bring it to a close at this point. And I just want to say thank you for your time and your collaboration with the AFC. So from this point, I'm just going to hand it over to Fifi. I believe, Fifi, you can take it away from here.
Banji, you're right. If you had 2 hours, I believe that the conversation would still be ongoing. I mean, you have absolutely fabulous speakers there who are making decisions about the continent with quite sizable balance sheets. And personally, I could have continued to listen to you guys, but of course, time is against us this time around. But thank you to you too, Banji, for a excellent facilitation of a very interesting and insightful conversation. So we have essentially one last thing to to get through before we officially call it a day, and that is the vote of thanks. And feeling like deja vu right now, just given the fact that the individual who gave us the vote of thanks last year is on our screens once more to give us the vote of thanks again this year. Mr. Mohammed Abdul Raziz, Senior Vice President at the Africa Finance Corporation. Sir, over to you. Good to see you again, and you are giving us our closing thoughts.
Thanks, Fifi. Good to see you again. Look, Your Excellencies, Honorable Minister, esteemed panelists, partners, colleagues, family, and friends, on behalf of the Board of Directors, the Chairman, the President and the CEO, Executive Management, staff, and colleagues of the Africa Finance Corporation, with all humility and honor, we say a profound thank you. A profound thank you to all our country members, to all our shareholders, to all our partners, our co-financiers, participants, and all key stakeholders who have been involved in the AFC journey and also participating in the fifth edition of the Africa Finance Corporation Country and Stakeholder Symposium. The message is simple, it's imperative, and it's timely. In all walks of life, Africa needs to support Africa. More so to create the economic prosperity we so desire and create an environment where our children and multiple generations ahead of us thrive and can compete globally. Africa's institutional savings needs to work better for Africa in a collaborative manner to drive sustainable and resilient development through the financing and building of critical infrastructure such as roads, ports, rail, power, industrial and natural resource assets, creating thousands of jobs, driving economic growth, and taking millions out of poverty. At Africa Finance Corporation, it's our honor, and it's up to us and our partners to work together to bring this vision to life. So with that, I would say again, a thank you to everyone, and also thank you to Fifi for hosting this incredible symposium and bringing all of us together to have this critical discussion at a time which is so timely and imperative. So thank you once again.
And sending the expression of gratitude right back at you, Mohammed. Thank you to you too. And in your words, the message is simple about making African savings here on the continent work better for the continent, for Africa. It may perhaps not be as simple a task. The task might be essentially a little bit more complex than that, but certainly not insurmountable. Thanks to you, the audience who have been with us for the past 90 minutes. Thanks so much for all your engagement as well. We have thoroughly enjoyed your remarks and your comments there above. Most notably, they'll all be taken on board as we review after this proceeding, and we chart the way forward for what next year does look like. But that officially wraps it up for us for the AFC's Country and Stakeholder Symposium, the fifth one of its kind. Have yourselves a wonderful rest of the afternoon, and we look forward to being with you again this time next year. It's bye for now.